This is Benjamin Tai. I'm the president of Wave Financial. We're one of the two co-hosts for the event today. Thank you very much for joining us across the different time zones. With me today, we have Tim McCourt, a managing director at the CME Group, heading the global head of equity products. We have Wayne Trench, the CEO of OSL. And we have Paul Ridley, CEO of Wholesale Digital Office at Nomura. And thank you very much for the three of you to join us on this panel. It's a pleasure to have you here. I think it'd be good for us to start with just a quick introduction of what you do and your focus with regards to digital assets. Tim, can we start with you, please?
Sure, thanks, Ben, and great to be here today. I'm looking forward to the conversation. So in my capacity at CME Group, I'm global head of equity index and alternative investment products. So that includes benchmark equity products such as the S&P 500, NASDAQ 100, the Dow Jones, and the Russell 2000, as well as alternatives, which at CME Group, currently we classify commodity index products as well as cryptocurrency products as part of our alternative investment product offering.
Great. I think that's a good grouping. I used to run commodities for Bank of America across Asia, so that's always an interesting space for me. Wayne, would you like to go next, please?
Sure. Thanks, Ben. Also great to be here today. Wayne Trench, the CEO of OSL, what we believe to be Asia's leading digital asset platform. We are a main board listed company here in Hong Kong, but with operations all around the world. We run four main verticals. We have a brokerage business, an institutional grade exchange, a custody offering, as well as a software as a service business, as I said, headquartered out of Hong Kong.
Great. Thank you very much. And Paul, can I hand it to you for your introduction also?
Sure. Paul Ridley from Nomura. For anyone that's not familiar with Nomura, it is a global investment bank and one of the largest and oldest securities businesses in Japan. At Nomura, I sit in the digital office within the investment bank, which is a group that's responsible for all of our fintech strategy, which includes digital assets, where we're active at this point and interested across the value chain, probably most notably at the moment with an announcement yesterday of a joint venture that we've been working on for some time in the custody space for digital assets called Komainu, which just launched and is really kind of the opening move for us in the digital asset space to take digital assets and Bitcoin in particular to our traditional clients. So this is an area that Nomura is very active in and will continue to be active in, and I kind of lead our efforts in Asia.
Great. Thank you, Paul. I've actually spent a number of hours in Tokyo with various different parts of Nomura, so I know there's a lot of activity there. Very exciting. So before we jump in, I think one of the things that I was looking at was really product innovation and thinking about how to approach this. I think as a good starting point, I think product innovation means slightly different things to different people. And I think for all of you, there are two different types of client base that we typically look at. One is really retail, kind of products that go to retail. And the other one is more institutional investors. And me potentially being a client of somebody like OSL, I'm really seeing myself as an institutional client rather than me personally as a client to buy Bitcoins off of OSL's services. So would you guys like to address who the buyers are? What are they investing in? What are they looking at right now? Just to kind of set a baseline for what we talk about on the product side. Tim, would you like to get started on that?
Sure, thanks, Ben. So I think when we look at CME's role in the marketplace, it's not necessarily that we can comment on who the buyers are, right? Because on the futures exchange, there's a buyer and seller to every transaction. But I think we've certainly seen some positive trends with respect to the customer segments being fairly balanced across both the sophisticated active individual trader, as you talked about, as well as institutions. And I think when talking about institutions, it's also important to note that we both mean traditional institutions, in terms of hedge funds, asset managers, but there's also plenty of institutions that are more native in the crypto space. So I think when talking about the institutional adoption, we also have to be mindful that it's probably not the traditional definition of an institutional investor. But I think the other thing to comment in terms of who we're seeing participate in the market, what's really been great to see in the development of the futures and the options on futures at CME Group is that participation is fairly balanced geographically as well. when we look at country of origin of the order in terms of where that order sender is domiciled or time of day, it's roughly split 50-50 from both a pre-US trading hour perspective as well as a US regular trading hour perspective. So to have that almost 50, that equal split of 50-50 between US and non-US is certainly a great development for the crypto market, and also a fairly it's an anomaly with respect to CME to have that almost equal participation both inside and outside the US, where other products, for example, in equities, is closer to 25% on average. So I think that's also great, not only the who, but where that flow is coming from, I think is of note as well.
Great. Wayne, would you like to comment on that? I know you guys service probably both pools, and you've also been expanding globally on.
Yeah, so I guess picking up on the point that Tim made there with outsized participation from Asia or participants outside of the US, certainly I gives credence to the notion that Asia plays a massive role in the existing crypto digital asset ecosystem. We've been in this space for by crypto standards for the equivalent of decades, I guess. And we've really seen an evolution of the customer base geographically. In fact, we've seen kind of the other side of it, Tim, in some ways, where more and more of our own business is starting to emanate out of the US and Europe and so on. But with a really strong presence in Asia, where the bulk of liquidity still currently sits today, we see an outsized proportion of our flows come from this part of the world. But as far as the types of investors, it's been a really amazing evolution in many ways. From the early stage where it was very tech savvy, early adopters who were lucky enough to get long Bitcoin in single digit dollars, to where we sit today, where if I look at our onboarding, if you think about 3 years ago, we were probably spending 80% of our time onboarding individuals, albeit more high net worth in nature. We're now spending probably 90% of our time onboarding corporates, family offices, private banks, crypto funds, traditional funds, and so on. So a significant shift towards the direction that we've certainly set ourselves up for, which is really servicing that far more institutional segment of the market. And just really pleasing to see that evolution take place the way it has.
That's great. Yeah, I totally agree on the fact that things move very quickly. I've seen really product innovation and evolution over the past year and a half. That would probably take a decade in the traditional space, and I have spent that decade in the traditional space, and it does move in a very different pace. Paul, would you like to comment, as you're still in a mostly traditional firm?
Yeah, sure. Yeah, so I guess further to what other people have said, I think that early on in the digital asset space, a lot of the product innovation was around solving problems that would help individual investors get into digital assets. Most of those kind of fiat on-ramps, for example, entry products, exchanges, and so on already exist. But what we're starting to see now really accelerate is the innovation that allows traditional institutions like ourselves and our clients get into the space. And so what that has kind of opened up is really the first wave of early adopting institutions, which are the same ones that are early adopters of other asset classes. So the more forward-looking hedge funds who are trading a small kind of 2 to 5% side pocket portfolio in obscure commodities, for example, are coming into digital assets or expressing an interest. Some of the family offices that have a new generation that is just starting to exert some influence on an investment committee are coming in and saying, hey, how are we not invested in Bitcoin? I can't go on Bloomberg without seeing articles on that. Let's get involved. That's what we're seeing a lot of now, and increasingly so. Less so the traditional institutions who might be endowments and foundations and pensions, who are the last to adopt everything. Don't see them coming in at all. But eventually the innovation that we are seeing will get to their doorstep as well.
Yeah, I'm a little disappointed to hear that, but basically with a lot of the endowments, I think they do have the capacity to try some of these things. They have a long timeline, and they are able to take the type of risk for this. And you know, I would love for them to jump in and do more. I used to do alternatives with them. They invest in all sorts of stuff. It's not like they're shy. So it's a disappointment they haven't dived, jump headfirst into this. So. Just to kind of drill in a little bit more on the institutional side, I think one of the big concepts right now that is kind of in development is prime brokerage, and the idea of having prime brokerage within, the new cryptocurrency asset class. We're now seeing Coinbase buying Tagomi. We're seeing Genesis buying Volt in Europe, and I think everybody's trying to put pieces together to try to get to a prime brokerage perspective. I'm just curious as to what your views on that, and do you find that to be a product innovation for the institutional clients? We'll start with Wayne. I think Wayne has the most pieces on this board for this conversation.
Yeah, sure. Look, prime is certainly the latest buzzword in crypto circles, but I think for us it was a journey that we started probably close to 3.5 years ago. Most of our team, or a lot of our team, come out of traditional financial institutions and are very aware and familiar with what having a robust prime offering can offer to customers. It makes accessing markets easier. It offers investors a much more efficient way to deploy capital. And also, I guess in the current state of the crypto ecosystem, offers a way for the more institutional investors to reduce their risk profile as far as counterparty risk goes, but even technology risk, like a lot of the venues that are currently traded on in the market. Obviously, a lot remain unregulated, but also from a technology perspective, there may be issues or changes that are hard for a more institutional-sized firm to consume and move with. So a prime offering helps alleviate all of those things. It's also a good business to be in. As far as traditional investment banks go, the prime part of the business is certainly one of the more profitable parts of certainly the businesses I've been involved in the past, and there clearly is an appetite for the newer, more traditional firms entering this space to operate using a mechanism that they know well and feel comfortable with, and so that's something we continue to evolve with respect to offering coin borrow lending, for example, or over-the-counter derivatives, and so on. So there's lots and lots of demand, and I do think that it does take the right DNA to be able to get that product to market safely, securely, and with the right risk controls. There's a lot of technology firms out there who are trying to put this in the hands of customers, but may not have the battle scars that everybody on this call has from time gone by.
Yeah, so we offer treasury services and wealth management services to institutionals and high net worth, and we would love to have a proper prime brokerage on the back end to support us. So certainly I'm very excited to see all the progress that a lot of the firms have made, and we certainly work with OSL, we work with other firms. Paul, would you like to comment on this? I know Nomura is active in the traditional prime brokerage space. I'm curious as to whether there are thoughts given to this direction.
Yeah, so there have been, and I guess from my perspective, in the crypto markets, a lot of the innovation and the Tagomis of the world and so on have approached prime by solving the same problems that prime sets out to solve. For example, improving liquidity and so on, but by using technology to pool liquidity across exchanges and improve order execution and so on. And for us, yes. That is valuable, and it's something that needs to be done. But at the same time, a lot of those problems could also be solved just by incorporating digital assets into existing prime brokerage services. So, if Nomura or any of the other big prime brokers said tomorrow to all of their prime brokerage clients, by the way, we can add Bitcoin, we can add Libra, we can add Ethereum to our existing terms and conditions. I think you'd see a huge uptick in activity. And so, the two sides, the tech side and the traditional prime side, I think are slowly going to converge. Both sorts of changes are necessary and will drive volume. but we won't really get there until you see both sides of that coin, really getting involved.
Yeah, it's really interesting to have both of you on the call because I think Wayne is approaching it from we'll build it from scratch with people who are experienced. And I think, Paul, from your side, we have the existing platform. How do we add the capability as an expansion? And I'm a big believer in, crypto being bolted onto an investment bank as just the next asset class. I feel like that was how commodities was added a few years ago. And now the next thing would probably just be crypto bolted onto an investment bank, another few desks on the trading floor. So, Tim, what are your thoughts on this from more of the exchange perspective? Are you seeing more people who are accessing you through kind of prime brokerage? Do you find that to help your business?
Well, I think in general, I've said in some other conferences and things as well, I think the advent of prime services or prime brokerage in crypto will certainly be a catalytic event. I think the idea of even the way we designed our contract at CME Group is the more we can make these products plug and play with those type of transactional services or the transactional handshakes that customers and participants are already familiar with, that will only make it easier, more approachable, and eventually even more successful. So I think that's what's really important to note here is that this continued evolution is making the market a more and more robust ecosystem. This is not necessarily just about the spot trading of crypto or the mining of crypto. You're having, from CME's perspective, the advent of robust futures and options markets on Bitcoin, as well as some additional reference rates on Ether. When we look at this, it's really the idea of an OTC market for derivatives, alongside a listed derivatives market, alongside the borrow lending market that Wayne was talking about. These are all central tenets of a highly efficient, symbiotic, and interrelated ecosystem. And I think that's what people are looking for in terms of that next wave of adoption, or where we get that next, kind of those people who are watching from the institutional space, but not necessarily entering yet. I think that will go a long way. Especially when we're looking at something like Prime. And that's what we've seen at CME Group. When we have our Bitcoin future at CME Group is financially settled to the Bitcoin reference rate. It plugs and plays in our systems and our clearing member systems and the trading systems the same way an S&P 500 index future does. So making it easy for people to get involved has certainly been, I think, a central tenet to the success to date, and will certainly be, I think, a driving force for the innovation to come in the next months and years.
That's great. Thank you for that. I think that's a great overview. Oh, Tim. Oh, okay. So there's a slight time delay on your video versus your audio. Yeah. So just kind of switching gears a little bit. If we look at more of the retail side, at the end user of our products and so forth. I think one discussion that we were having was how much education we should have and what type of products we're able to provide. Can we kind of get into a little bit more about that? What are you seeing as innovative products are coming to the market that can potentially be consumed by retail? Wayne, should we start with you again?
Yeah, sure. I mean, we generally don't service what we would call the retail end of the market, right? Like the individuals that we service would be sort of accredited investor sort of status in general terms. But look, there's been a real uplift in product innovation over the last couple of years. And the interesting thing though for us is that it's a playbook that we kind of understand well, right? We're following in many ways what we're all familiar with in traditional asset classes, and the types of products that the traditional hedge funds require are now starting to come to market. I do think one of the big changes, though, is that there's been a real changing of the guard begin to take place. Whereas, we started with, and there remains to be numerous unregulated markets that provide leverage swap products or futures and so on. We're seeing a general shift towards more institutional platforms, more institutional players like ourselves, like CME, Nomura, and so on. Like, I think the options growth, Tim, correct me if I'm wrong, but it's 10x or more in pretty short order. The futures open interest is significantly higher. I think we too are seeing that, right? With our own growth in volumes across the platform, largely on the back of a very institutional strategy. As far as the products themselves, we've had. We're now seeing structured products gather a lot more interest, and swaps. In addition to the coin borrow lending that I mentioned before. And you, as Tim rightly pointed out before, you require all of those sorts of products for an efficient marketplace, in our view, particularly for sophisticated investors to get involved. And it's another point of friction that is removed to allow them to sort of get involved in the space. We have to remember, right, that a lot of the IMs for these traditional hedge funds don't allow them to be more than X% long or short or any direction, or maintain naked positions long or short. So the advent of the CME futures, which as Tim has pointed out, has been put together in a way that's easy for the traditional participants to consume. It looks and feels like what they used to, has really helped that. And I think for the way that applies for us is similar in the over-the-counter products. It's not strange or unusual the way they're structured. We have an ISDA-like sort of a set of terms and conditions that people are comfortable with and understand. And then even from a technology perspective, right? People need to be able to connect into these products using FIX, for example, or co-location. And we need to have things like transaction monitoring and market surveillance to be able to engage with these more traditional and institutional participants. So I think there's innovation on the actual product its side, but there's also been innovation in the infrastructure uplift to allow the more material participants to enter and participate in the space.
Great. Thank you for that. Tim, would you like to add to that in terms of innovation on your side with regards to either on the institutional infrastructure side or also on the more mass offering? Wayne, I agree with you. I think my term of retail is probably a little bit too wide. I think the current focus for most people is probably more high net worth, accredited investors space. It's unfortunate, but it's the reality as we're bound by a lot of the regulations that are associated with that. So Tim, please.
Yeah, for sure. And I think when we're looking at the innovation at CME Group, I think the one thing that's always interesting from our perspective is, CME Group is nearly a 180-year-old institution. We started as a butter and eggs exchange, right, on the streets of Chicago, and now we're offering cryptocurrency futures, right? So I think there's a long storied history of innovation where we have products, futures and options across all major investable asset classes, now including crypto. And this is an asset class that didn't even exist 10 years ago, right, or a little over 10 years ago. But I think for us, the innovation it's about being measured, and how can we balance our desire to innovate with our ability to build the highly efficient, trusted, and transparent markets for price discovery. So that's why we really started back in November of 2016 with introducing the Bitcoin reference rate with our partner Crypto Facility. And that was kind of the first step, is getting people to believe or ascribe to the value of Bitcoin and dollar on a daily basis, such that we could then structure products around that reference rate. And we launched futures in December of 2017, which Wayne has said, doing fantastic, doing the equivalent of about 42,000 Bitcoin per day here in 2020. And then, we always wanted to introduce options, but to introduce options on futures, first you need a robust underlying futures market. So in January of this year, we were finally able to introduce the options, which are doing great, about 2,500 Bitcoin per day, with the record of about just a little bit, I think around between 8,000 and 9,000 a week or two ago. So the volume growth is great. The demand is there. And we're always innovating in response to clearly articulated customer demand, but it's doing so in a way that, again, is kind of measured, and we could balance the wanting to innovate and wanting to deliver these products to the marketplace, but to make sure they can do so in a successful way, and then in a way that people are accustomed to when managing their risks or accessing the markets at CME.
Great. Okay. Paul, kind of over to you. I know the custodial business that you mentioned previously is a big addition to the field, and I'm actually I welcome you guys coming into the custody space. I'm actually quite excited by that. So would you like to comment more there, or any other kind of infrastructure or product improvements?
Yeah, sure. So I think that a lot of the sort of changes and evolution that's going to be seen for retail and for the institutional side, it is less so around what the actual new products are going to be, new wrappers, that sort of thing, but more so around where it's coming from, who's offering it, and how easy it is to access. And so my personal view is that you're going to see a lot more traditional institutions like Nomura, like CME, like Fidelity, TD Ameritrade, and so on, offering these products through their existing channels to their existing clients, whether that's retail or not, in a way that will be light years more kind of accessible and easier to kind of dip a toe in for all kinds of investors. Our joint venture custody business, Kamini, that I mentioned before, is one example of that. We're working on a handful of other projects in the digital asset space, similar to that as well, that will kind of bring different parts of the value chain in front of our existing clients in ways that they haven't been offered them before. And another example of that is Libra, where people will be able to hold digital currencies and buy them from their retail banks. I think the impact that that's going to have on the space overall can't be overestimated, and it's something that is really going to contribute to the growth of the whole ecosystem.
Great, thank you for that. And I've been prompted to that. We actually need to kind of start wrapping up. So I'll throw out a final question for all of you. I think this is actually one of the questions that was asked in the chat group, and it's a very general question, which is, when do you see digital securities take off? And I was thinking about how I would answer that, and I think it depends on what that specifically references to. So before I kind of set that in stone for anybody, I'll just leave it open. Well, Tim, we'll start with you. Do you want to kick off on what your thoughts are there and how you see, your definition of digital securities taking off?
Yeah, well, I mean, I think from the futures perspective and futures on digital assets, I think they're already taking off at CME, which has been great to see. It's been a lot of fun to work on. Hard for me to predict the future of where we'll go from here. I think if I could do that, I'd have an even different job. But certainly exciting and looking forward to see what's next, and really happy to be part of it. It's been a lot of fun the last few years working on in cryptocurrency and building these
Great.
products.
And Wayne, I think for your firm, you guys have been in that space for a while and have done quite well. So I think it's probably an easier answer for you. When do you think digital securities will take off from your perspective in a much more massive sense than what you're doing right now?
Yeah, look, regulation is probably the big one. If we're talking about tokenized equities or debt, sort of type instruments, right? And fortunately for us, being headquartered here in Hong Kong, the SFC's guidance around their virtual asset licensing framework not only requires successful license holders to not only allows them to trade security tokens, but in fact will enforce participants to trade security tokens. So as and when the licensing, the SFC does issue licenses to successful holders, I think that will be a big step forward in the uptake of security token offerings, is with one of the world's preeminent regulators really getting behind it and putting a proper structure in place. We are seeing other jurisdictions around the world though move in that direction as well. But I think the technology is there, right? It's not like we're waiting to see whether the technology is there or whether the demand is there. The ICO craze of a few years ago will show that the demand and the ability to raise extraordinary amounts of capital quickly through technology is doable. It's now down to the regs, and that is we are hopeful that's quite imminent in this part of the world.
Great. Yeah, you mentioned the STO world, which is really near and dear to my heart, and it's unfortunate we're going to run out of time to get into that topic. That could be hours and hours of discussion. I know you guys are also applying for a license in Hong Kong. We wish you the best of luck there.
Thank you.
Paul, would you like to comment on that? In terms of when you think it's going to take off? I know the STO space is actually pretty hot in Japan right now, and we're actually a member of the JSTA, and we're actively involved in that space. So would love to hear your views on that.
Yeah, sure. So I guess building on what we've heard from Tim and Wayne, we share the view that digital securities and security tokens are the future. They will arrive and they will replace traditional securities, such as sort of we've traded them over the last 100 years. With that said, there are a lot of pieces that need to be put in place before that's going to be possible at scale. Certainly you need the technology. I think a lot of the technology is pretty far along at this point, or at least far enough along to get out of the gate. You need the regulatory environment, which is probably not quite there completely, but moving in the right direction. You need the banks and traditional issuers to be able to offer digital securities at scale. Ultimately, for me, I think that these products can't really take off until you have a big global bank say, actually, if you want to be part of this next bond offering, it's going to be digital. That's the way it's going to be issued, and here's how you can do it. Take it or leave it. At that point, I think that the tide starts to turn, but you can't really take that first step until every step along the value chain is sorted out. And unfortunately, that does take quite a while. I think that we're probably 5 to 10 years from the beginning of that wave, and I think we'll see how it goes from there. With that said, as we know from watching crypto for a number of years, the tide can turn very quickly, and that's what we're preparing for now.
That's great. I agree with everything you've said except the 5 to 10 years part. I don't have 5 to 10 years to wait for that, so I'm hoping it'll happen a lot sooner. Not as a plug, just too much of a plug for myself, but we're working on products that would go through the security token landscape. I mean, the thing I'm working on right now is actually a whiskey fund, which I've talked about before. So, I really truly believe that we can take advantage of the existing regulations legally and compliantly to get things going. And over on top of that, we can get a fund going. We're doing tokenization of crypto. We're doing tokenization of whiskey. We're doing quite a number of things, and I believe that that's already legal. I do agree with you. No major bank has said, yes, we want to sell your whiskey fund yet, so I'm still waiting for that. So if anybody knows any major banks, let me know. And happy to have this chat. So I'll wrap it up here. Thank you very much for your time today. It has been very informative. I'm seeing some of the message on chat. I believe everybody is all very appreciative also.